In this video, I'm going to walk through calculating using the degree of operating leverage. Our formula for degree of operating leverage is total contribution margin dollars divided by total net operating income dollars. And for this company, Ehrenberg Company, we have their contribution format income statement, and their total contribution margin dollars is 48,000 divided by their net operating income is 10,000, and so our degree of operating leverage is 4.8. I want to know, we've had other calculations that are percentages. You have to move that decimal point. This is not a percentage, it's a multiplier. Our degree of operating leverage is a multiplier. Ultimately, how we're going to use it as a multiplier is we're going to multiply that degree of operating leverage of 4.8, and we can multiply it times the percentage change in sales. And it doesn't matter if that's an increase, it doesn't matter if it's a decrease, and it'll help us predict the percentage change in that operating income. For example, in this scenario, we're expecting sales is going to increase by 5%. If that occurs, multiply it times our degree of operating leverage multiplier of 4.8, and that lets us know a 5% increase in sales is predicted to increase net operating income by 24%. Now that may initially seem unbelievable to say, wow, small change in sales, huge change in net operating income. Keep in mind that a lot of this has to do with the composition of fixed expenses that aren't expected to change if our sales level changes. The last part of the problem is just to prove out, we're not making this up, it is a multiplier of 24%, and they ask us to restate our contribution format income statement, assuming we have our 5% increase in sales. So go ahead and just put the format of our contribution format income statement just like we have over here to the left. Our sales is going to increase by 5%. So we can take our current 80,000 in sales, multiply it times 105%, which is increasing it by 5%, and that would bump up our sales to 84,000. How are we going to figure out our variable expenses? Well, our assumption is the normal rules of variable costs, that our per unit variable cost isn't going to change, and what's going to change our total variable cost is our activity level. If sales is increasing by 5% in unit sales, then variable expenses, knowing nothing else that's going to change, is also going to increase by 5% because of the activity level increasing by 5%. So take that 32,000 times 105% brings it up to 33,600. So if I transfer the sales information now of 84,000 with a 5,000 unit increase, minus the variable expenses of 33,600, our contribution margin is 50,400 with that 5% increase in sales. Notice that our percentages are still the same. For example, our variable expense ratio, the variable expenses divided by sales, remain at 40% because again, our unit costs for variable costs are staying the same. It's just the number of units that's changing. Also, our contribution margin ratio, contribution margin divided by sales, remains at 60% because again, the selling price and the variable cost per unit isn't changing, it's just the number of units is increasing. What about the new calculation for fixed expenses? Is that also going to increase by 5%? Nope, we're going to stick with the normal rule of fixed expenses that they don't change unless something else is changing that we're not aware of. Fixed expenses aren't expected to change in total if just the sales level is changing. So they're going to remain at 38,000 just like at our 80,000 sales level. 38,000 in fixed expenses minus the contribution margin of 50,400 means our new net operating income is 12,400. Again, recall, we said that a 5% increase in sales would lead to a 24% increase in net operating income. And let's prove this out. If we took our $10,000 and increased it by 24%, we do that by also multiplying it by 124%, it would be 12,400. So that proves out that a small change in sales leads to a huge change in net operating income. I want to note Increases work just like decreases. If this had been a 5% change or decrease in sales, it would have been a 24% increase in a decrease. Sorry, I keep saying it wrong. A 5% decrease in sales would have led to a 24% decrease in net operating income. Degree of operating leverage is just a measure of a multiplier or lever of how sensitive net operating income is to changes in sales.